Welcome. In this video, where is Zbcn coin next stop? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable structural elements on the chart is an ascending trend line that had formed in the past and was respected by the price for a considerable period. This upward trend was tested multiple times by the market, and as long as the price stayed above it, the bullish momentum remained intact. However, in recent times, the price has broken below this ascending trend line, raising short-term concerns about the market's momentum. This breakdown may have initially created a cautious sentiment among investors, as breaks of upward trend lines are generally perceived as a sign of weakness. However, upon closer inspection, it's evident that the price has started to move back toward the trend line following the break. This scenario is known in technical analysis as a retest, where the price returns to test a previously broken level. Such tests are critical for assessing the validity of the trendline break. If the price fails to hold at this level, it may suggest that the trend is no longer valid and that downward pressure could continue. On the other hand, if the price manages to reclaim the trend line and hold above it, this could signal a very different outcome. If the price climbs back above the trend line, market sentiment can shift rapidly. Investors may interpret the move as a false breakout, which often creates a more optimistic outlook and increases buying interest. From a technical standpoint, in such cases, the trend line can once again act as a support level, potentially launching the price toward higher targets. Another key factor to consider here is how strong the retest process is and what kind of structure the price forms around the trend line. If the price begins to react to this level with increased volume and upward movement, it would be a strong indication that buyers are re-entering the market. This could potentially mark the beginning of a new bullish wave. A successful reclaim of this level would not only be technically meaningful, but also provide psychological confidence to investors. Those who previously profited while the price remained above the trend line may see this as an attractive opportunity to re-enter positions. This, in turn, could increase buying pressure and accelerate upward momentum. In short, this ascending trend line, which has previously served as strong support and guidance, is now once again in a decisive position. How the price behaves around this line will play a crucial role in determining short to mid-term direction. If the price successfully breaks back above and holds, a renewed uptrend could likely follow. Conversely, if the price fails to hold and comes under downward pressure again, some further retracement may occur. But we cannot rely solely on trend lines for analysis, so let's also examine other metrics. Stay tuned. When analyzing the chart in detail, one of the most striking technical structures is the Fibonacci retracement levels applied from top to bottom. This method is highly effective in identifying potential resistance and support zones during a retracement in price. Especially after a decline from a peak, these levels play a critical role in assessing whether the price might respond with an upward reaction. In this context, when a Fibonacci retracement is drawn from top to bottom on the current price movement, the 0,618 and 0,786 levels stand out significantly. These levels are commonly known in technical analysis as the golden zone, where price often encounters strong resistance. The price is currently situated within this strong resistance block. That is, the area between the 0.618 and 0.786 Fibonacci levels has historically been a decision point for many investors. Therefore, how the price reacts upon reaching this zone is of great importance. If buyers are not strong enough, it is common for the price to stall or even pull back at these levels. However, if the price manages to break through this challenging area with significant volume, it can be interpreted as a sign of renewed confidence in the market and that the bulls are taking control. Nevertheless, in order for the price to surpass this level, it needs support not just from a technical standpoint, but also in terms of market psychology. This is because the 0,618 and 0,786 levels are closely watched not only by algorithms and technical traders, but also by manual traders. As a result, it is natural to see increased sell orders in this zone. However, if buy orders outweigh sell pressure, the price could break through this resistance area and target higher levels. Otherwise, this zone will act as a ceiling and cap the upward movement. At this point, the price has touched this area, but a clear direction has not yet been established. Investors should closely monitor the potential for a breakout scenario. A breakout accompanied by increasing volume would provide confidence in the sustainability of the upward move. On the other hand, if the price weakens at these levels and responds with a downward move, the Fibonacci levels would once again serve as effective resistance. Moreover, breaking through these levels can be decisive not only for short-term movements, but also for the direction of the medium-term trend. Surpassing such significant Fibonacci levels is often interpreted as a sign of trend reversal. If the price moves past these previously reactive levels and holds above them, the notion that the prior downtrend has ended and a new bullish cycle has begun gains strength. In conclusion, the resistance block between the 0,618 and 0,786 levels in the top-to-bottom Fibonacci analysis is highly significant for price action. A breakout above this area could have a strongly positive impact on the technical outlook. However, a rejection at this level could also lead to renewed selling pressure. Therefore, price behavior at these levels should be closely monitored not only from a technical standpoint, but also for strategic investment decisions. When closely examining the RSI indicator, one of the most technically significant features is a descending trend line. This trend line has been drawn through the recent RSI peaks and indicates that the indicator has generally been under pressure. In other words, although the RSI has attempted upward moves at various points, it has repeatedly failed to break above this trend line and has been turned back from lower levels with each attempt. This suggests the presence of an invisible yet influential resistance that has been suppressing momentum in the market. When we combine this with price action, a potential breakout above this descending RSI trend line emerges as a critical threshold. Such a breakout in the RSI is often viewed as a leading signal that the price may be preparing to break free from selling pressure. Since the RSI reflects the balance between buying and selling in the market, a break of this trend line to the upside implies that buyers are gaining strength and selling pressure is starting to wane. Naturally, this could exert upward pressure on the price and increase the likelihood of a potential rally. However, there is an important point to consider. A breakout in the RSI's descending trend line is merely a signal. For a bullish scenario to be confirmed, the price must also show a similar direction. If the RSI breaks its downtrend and the price simultaneously breaks key resistance levels, it would indicate that the upward move is based on solid foundations. Otherwise, temporary deviations in the RSI could be misleading and cause investors to make incorrect decisions. Additionally, a breakout of the descending trend line on the RSI not only creates short-term bullish expectations, but also signals a potential shift in overall market psychology, especially if this trend line has been tested multiple times in the past without success. A successful breakout now suggests growing confidence in the market and more aggressive behavior from buyers. Such breakouts are often accompanied by increased volume and can pave the way for the price to enter a stronger upward trend. In summary, a breakout of the descending trend line on the RSI serves as an early warning about the potential direction of price movements. If this breakout occurs, it would suggest that the market is beginning to regain strength from a technical perspective. This could potentially mark the beginning of a larger bullish move. However, it is crucial to monitor whether the price aligns with this signal to avoid being misled by false breakouts. The RSI can break out ahead of the price. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.